Good afternoon, and welcome to this week's edition of the Halftime Talk feature interview, where we take a moment each week to take a slightly deeper dive into some of the trends and issues impacting the global energy markets. And today we're delighted to be joined by Tim Callen, visiting fellow at the Arab Gulf States Institute, a deep biography that takes him right through the Gulf region and Saudi Arabia and the IMF and that perfect nexus of where big geopolitical events intersect with real growth of financial reality. So, Tim, thank you for joining us.
Thank you very much for having me on the show, Sean. I'm looking forward to our discussion.
Tim, let's start with the sort of fiscal impact. I mean, there's a lot of ways that one can cut into the cake on this, but ultimately, let's look at it from the sort of fiscal angle, the sort of where that intersects with the macro and the region. So, if we take slightly bigger picture, we came into this crisis, the Israel-US war on Iran, with the world in a relatively healthy economic space. The Fed and different central banks were kind of in a pathway to easing and supporting growth. The Gulf economies were doing pretty well. Now the policy shift seems to be that inflation's back. The Fed is looking at best pausing, maybe tightening. What would be your sort of big 10,000 foot view macro global growth impact of this crisis 1 month in?
Yeah. Well, I mean, I think there's no doubt, right? We've had a huge oil price shock. We don't know how long that's going to be sustained, but a classic oil supply shock like this, what we're likely to see is weaker global growth and higher global inflation. And I think, Asia, we're already beginning to see an impact, right? We're seeing, in some form or another, fuel rationing happening, whether it's, you can only fill up your car on certain days of the week, it's a 4-day work week, other restrictions coming in. So, whether it's through, quantity restriction or price increases that then lead to adjustments in demand, I think we are going to see a big impact on growth and on inflation. Of course, how big those impacts
When we
are.
think about that impact piece, it's clear that we've seen already fairly a frontline impact in Asia. But what about the US? It looks nearly like the US is immune. Donald Trump even sort of boasting about it this week. Oh, come buy our jet fuel. If you guys are running out of jet fuel, we've got lots of everything. He seems to have a lot more runway here than Europe or Asia at this time.
I mean, I think that's true. Clearly, the US is a net hydrocarbon exporter, but that doesn't mean that people aren't affected in the US. Yes, there's basically going to be a huge wealth transfer to oil and gas companies in the US, but the consumer at the pump is paying, now an average of $4 for a gallon of gasoline. That was like probably three or a little bit less than three, 6 weeks ago. And of course, there's, air conditioning, heating in the winter. So there are many ways that the consumer is going to be affected. So, yes, net, the US is better off than many other parts of the world, but
Does
there's
that
also a
add up to being
distributional impact.
Does it add up to being consequential in political decisions? I mean, we hear about it, but the equity markets in the US, yes, they've come off a little bit, but ultimately they've been on a bull run for 15 years. I mean, everybody's made a fortune. It's like 5 or 10% correction is nearly healthy and welcome. I mean, it's hard to identify, maybe if we're not on the granular ground and getting food stamps in Oklahoma, where this stress in the American economy is.
Well, I mean, I think there is stress in the economy, but of course we're, still at this point in relatively early days of this. And I think the question is, how long do oil prices and then consequently gas prices stay high? I think if you look at the, history going back in the US, gas prices do matter for elections, right? Of course, one scenario is this is all over relatively quickly. Oil prices, gas prices come down. Another
I mean,
scenario is it
it feels
drags
like we're
on.
kind of through that. I mean, this happening quickly thing seems to be very much yesterday's news, the wrapping you put on your fish and chips.
Yeah, so if that's the case, gas prices stay high. I think it does become a political issue as we head to the midterms in the US. Of course, the Democrats will try and take advantage of this, and the administration will say, it's much less of a deal. But my sense is it will matter come November if gas prices stay high.
Most importantly for the globe, the bigger, obviously, there's many aspects. The American economy is relevant to everybody in the world, but most notably, where does the Fed take this? Where do you think that pathway leads? There's some indication that the first month of this war, or the Fed are going to have to tighten instead of ease. Now it seems the sentiment is shifting.
Yeah, I mean, I think the call for the Fed is going to be a hard one, right? Because, what do you do in a situation? How do you balance higher inflation risks against weaker growth? I mean, I think the classic response here would be, well, you look through the initial supply shock on prices and look how it's affecting, longer term inflation expectations. I think that'll be part of this. How do you see growth now versus inflation in the future? I think it's too early to call, and I think the Fed has been clear at this stage that it needs more information to try and work out what the relative impacts are here on prices and growth.
If we look at the other end of this pipe, so to speak, obviously we're here in the Gulf. The you mentioned there in your earlier comments that obviously big transfer of wealth from the oil producer to the consumer in America, the big companies, you can see that in their share price soaring, ExxonMobil, Chevron, all of them up 30-40% this year. But here in the Gulf, usually we would similarly be beneficiaries of that, but on this occasion, we're not able to sell our oil and gas and all of our other stuff. How do you see the fiscal impact for the Gulf states here as this plays out going into the second month?
Yeah. I mean, I think to some degree it varies across country, right? I mean, Saudi is able to get some oil out through the East-West pipeline, and by reports recently, that's now pretty much at its 7 million barrel a day capacity, maybe 5 million barrels a day of that being able to be exported. So for Saudi, I think the more is more of a question of whether the price rise is sufficient to offset the loss of exports here. As you said, though, for some countries, right, it's no good having higher prices if you can't get the product to market. So there is going to be a much bigger fiscal hit. Now, I think the good thing for all of the Gulf countries except Bahrain is that they have, pretty sizable financial buffers. So, short term, yes, they're going to take a big fiscal hit, but they can absorb it. Of course, the longer it goes on, the more those buffers are going to get tested.
One of
Bahrain is
those
clearly in a
buffers that will
different
be
position.
One of those buffers tested is obviously all of our currencies are pegged to the dollar. Does that structurally get tested as part of this situation?
I mean, I don't think so. Certainly not in the near term, right? I mean, I think that there are, more than enough, foreign exchange holdings in various forms that the pegs can be supported.
I mean,
I'm
there
not
is a lot of
sure it's
reports of capital flight over the last few weeks, particularly from the centers that have big international residents and companies.
Yeah, I think that's right. I think that's what you would expect. You can see it. I'm much more familiar with, Saudi data. You can see some selling by foreign investors from the Saudi stock market over the last month, although I would note there that after they eased foreign investment restrictions, we saw a big inflow of foreign buying into the Saudi market in February. And if you net February, March, it's still positive, although March has been negative. Of course, as you say, there are other more, financial, center places, Dubai, Bahrain, who have probably seen more in the way of outflows than other countries have had. But again, I think, with the exception of Bahrain, the buffers are there to support the peg.
But
And I
do
don't
those
think.
go
Go
ahead?
ahead, go ahead.
I
No,
was just say, do those buffers need to be repatriated? I mean, yes, of course, these states have huge sovereign wealth funds. ADIA, some reporting it could be as big as $2 trillion at this stage, given the way the markets have performed in recent years. But it's all invested in many parts of the world. Will they have to repatriate? Will we have to bring some of that funds home? And what are the dominoes effects of that?
Yeah, I mean, absolutely right. You're going to be relying on using your foreign assets. I mean, I expect many of them are held in dollars, so dollar assets, to bring them back to basically offset the capital outflows and the loss of the oil revenues. Again, I think it'll vary by country. For somewhere like Saudi Arabia, it has very significant foreign exchange reserves at the central bank. Those in all likelihood are largely invested in bonds. Probably not all of them, but a large part. So that will involve some, sale of foreign bonds, use of deposits abroad to come back. I think we know much less about the structures of some of the sovereign wealth funds. How much is, clearly what matters is liquidity here. How, quickly can you realize the assets that you've invested in overseas? But I, suspect through the oil companies, the sovereign wealth funds, there are liquid assets out there that can be sold and repatriated, coming back. And, it's not like the Gulf hasn't been through these cycles before, right? With the
Been
time
through
in
nothing like this before.
2014, 15. Well, we haven't, and that I think goes back to partly how long this lasts, right? Because the size of the hit here in the short term is large. It can be absorbed. Of course, if that hit goes on longer and longer, then it's going to be harder and harder to be realizing the assets
Well, if we
to
take
support the
Saudi
pegs.
Arabia, which is a country you have expertise and focus on, and it's also obviously the biggest economy in the region, it was already in a somewhat repositioning structure in the last year, slowdowns in spending, the big giga projects and NEOM and others were starting to be curtailed and rethought. Basically getting a little bit back to basics. There's a lot more at stake here than just, oh, we've lost some oil revenue. The confidence of investing, FDI was already a challenge. How does this trickle through? I mean, revenue aside, the Saudi might be holding at $100 oil. They might even find they make a net gain in revenues this year, more than was expected at the beginning of the year when it was forecast Brent crude oil would only average at $60 a barrel. So they might actually find themselves in a fiscal surplus in Saudi at least. But nonetheless, the wider economic reform program and all of the other pieces of their puzzle, how do you think that takes a hit?
Yeah, I mean, I think there are two aspects here, right? One is I suspect that policymakers in Saudi and the Gulf look at this, current period and think, diversification is really important. We need to keep pushing along with this. On the other side, I think you're exactly right. The question is, how does this affect investment, tourism, people? Particularly skilled expatriates coming to want to work in Saudi or the broader Gulf. And there, I mean, to me, I think it's pretty clear it's going to be negative across all of those fronts over the medium term. The question is how big that negative is. Um, my sense is Saudi is probably in a better position than, the rest of the Gulf, with maybe the exception of Oman in this area. But I think it will have an impact. The size of the impact probably depends on the outcome at the end of this conflict, and how much do, investors, people to visit the region see, conflict as a potential risk going forward. Are we in for a period of more instability in the region than was expected before this conflict? And my guess is, in most scenarios, the answer to that is yes, that people are going to view it as a less stable region.
When we
Um, yeah,
looking through on the longer term and try to find, as we wrap up, some silver linings here, and inevitably in every tragedy we whether we face personally or in as societies or economies, there's always lessons to be learned, changes to be made that are always quite difficult to do in normal times. What do you think this may offer the GCC, the Gulf states? What kind of silver lining that otherwise may not have been there? I mean, one of the things they've been struggling with is sort of deeper GCC integration, a la like
yeah.
EU model.
Yeah, I mean, I think that that's certainly one of the things I would expect to emerge out of this for the GCC, a push for greater economic integration. And I think, even before the conflict, we'd seen, a lot of plans, some movement towards interlinked GCC transportation systems, and that seems to have been getting a push right in the last 4 or 5 weeks, in terms of how can we overcome the closure of the ports around the Strait of Hormuz, rail lines, road networks, using the ports on the Red Sea coast. So I would think that is certainly one area where we will
Integrated
see
pipeline
greater.
networks, you would think, given how
Yeah,
isolated.
exactly. Yeah, I mean, I think that's right. And I think, Saudi Arabia has been shown to be, sort of great foresight in terms of investing and developing the East-West pipeline, right? I mean, it's a big investment. It was many years, but it's now been shown to be, a really important solution. And I think you're right that other countries will be looking at, you know, what are the other options that we have here for not being so reliant on the Gulf of Hormuz. So I think, that's one area I would see as being a big area of future development. I mean, I think, the other thing, clearly, prior to the conflict, there were, apparent tensions within governments in the region, particularly between Saudi, UAE. I think this crisis has probably brought people closer together, I think, on that side as well. From an economic point of view, maybe that's not a huge deal, but, I suspect it's still important that, those political connections should be, reconnected, and that again would help, I think, with, broader economic integration in the Gulf. The other thing is, as well, I said, it probably emphasizes again the importance of diversification. I mean, of course, even exporting other products, doesn't help if you can't get them out of your ports. But, it's sort of, again, do you want to be, in many cases, so heavily reliant on oil and the volatility of the oil markets? I think the lesson is, the less you can be that reliant, the better off you're going to be. So I do see, a further drive down that diversification route going forward.
Well, we'll have to leave it there. Great to get your insights, and particularly at this moment as we finish the first month of this unfortunate regional conflict, and hope we don't have another month. But it does look like this is going to drag a little bit, according to what the American president has announced, at least another few weeks and possibly more. Tim Callen, visiting fellow at the Arab Gulf States Institute. Thank you for your time today.
Thank you very much, Sean. A pleasure.